back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. All right, Nick Santiago, President and CEO InTheMoneyStocks.com with us right now. Nick, welcome back to the show.
Great to be back, Michael. Thank you for having me.
Oh, my pleasure. All right. Do you want to start off with, TXN?
Yeah, I wanted to start off with the 10-year bond yield on the U.S. Treasury. And I think this is very, very important because what traders are going to note today is that the S&P 500 is catching a bid. Also, you're going to see a lot of the housing stocks catching a bid. Even the utilities are catching a bid, and that sector has been really beaten up. But it's all because the 10-year bond yield is pulling back. And, traders can look at the 30-year, but the 10-year really is what mortgage rates are based off of and a lot of the loans that are made. So I think traders need to watch this. This yield now has gone up to around, I believe, a few days ago, we hit a high of around 2.27%. And then if you look at the weekly chart, you'll notice there's a ton of resistance around this level. So while I don't think rising yields are over, I do think they're due to pull back a little bit, at least within the next few days to at least a week or so. So if yields pull back, that could give a little bit more fuel to this market, especially the interest rate sensitive sectors like the home builders, the REITs, and also the utility stocks.
Okay, all right. When you say a little bit of a bounce, because it looks like we tested the 1600 level a little while ago, again today, are you thinking that we're going to take off from here and go to the other side of the range?
Well, when you're looking at the spiders right now, we've tested the 50 moving average today again for the second time, and that market has held it. Today's volume does not have a lot of conviction on the S&P 500, so I think that to test the highs is still a little bit of a challenge, or to take out the highs. But right now, as long as the market stays above the 50-day moving average, it has a chance to move higher, especially into next week.
Okay, all right. Now, the other market that you wanted to talk about was U.S. dollar, Japanese yen. What's going on there?
Yeah, I want to talk about the dollar yen because outside of interest rates in the United States, the dollar yen is probably the most important trade out there. It's a carry trade that's happening right now, and that's why you see the Nikkei 225 index, which is Japan, crashed again last night, down over 6%. But it all has to do with this dollar-yen chart. When the yen loses strength and starts to be devalued or it starts to fall, then the markets around the world, not just in Japan, will rally. And today you can see that the yen is losing a little bit of momentum, even though today it went down to around the 379 level. It has rallied quite significantly, and that's also helping the market. So if dollar yen starts to move higher, that means the Japanese yen is moving lower, and markets will catch a bid. So this is going to be probably the most important currency pair that anybody can watch right now because it has so much of an effect over the overall stock indexes.
Are you trading this?
Well, I've traded the FXY a little bit, and that's the ETF for the yen, and I'm completely out of the position now. But we did trade this up to the 102 level.
Okay, all right. Are you looking for a new position to take on this, or you want to let it settle out?
Yeah, well, now we have to let it form a base or give us some kind of a pullback pattern. There's really nothing to do there, but over the next couple of weeks, I probably will update you on a position that I will be looking to get into with this vehicle. Okay.
Now, you're the one that alerted us to the JP Morgan tip-off, if you will. That this is the tell for the rest of the indexes. Talk to me about what's going on with JP Morgan.
Well, JP Morgan, as you know, as long as that stock holds up, overall the stock markets are going to hold up. I mean, all the financials for the most part, JP Morgan in particular, because I think that's the real Bank of America anyway, remains very, very strong. The stock briefly pierced its 20-day moving average yesterday. It recaptured it today, sitting right at $54. I really don't see anything wrong with JP Morgan right now. And until this stock rolls over, this is just a good trading market, and you can continue to buy the dips in this environment.
Okay, well, what does that say for the banking index? I mean, is that a buy now?
It's not a buy because it's up too high, in my opinion. But the banking index is still holding up very, very well, and it's overall signal saying that the major stock indexes can still hold up, at least for the foreseeable future. I would say the next couple of weeks.
So I'm trying to connect the dots here. It seems to me that what we're feeling, the feeling I'm getting from you, is that we could be going through a support area accumulation phase that could last for a little while.
Sure. I mean, that's certainly possible. I think overall, when you look at the major stock indexes like the Dow and the S&P and the Nasdaq,
Right.
they can be very, very vulnerable in the second half of this year. But as long as these financial stocks continue to hold up, especially J.P. Morgan, these markets, will again hold up. When these stocks start to break down, though, I think that's where traders are going to start to run for the hills, and most investors out there are going to say, hey, something's really fundamentally wrong and broken here. But until that time happens, we can continue to buy those pullbacks in the market and, trade this market on both sides of the tape, whether it's long or short.
Okay, buy the pullbacks. Are we at a level where that's going to apply right now is what my question is?
Yeah, I think right now you have a little bit of a low put in on the 6th of June. And today you got a little bit of a higher low if today's market holds up into the close, which I suspect it will. So, yeah, I think the markets are holding up okay, and that'll probably last for another week or two, and we'll just have to go back and look at the pattern on the charts.
Okay, all right. Now you've got something else. Joy Global.
Yeah, I wanted to bring up Joy Global today because this has just been one of the worst sectors out there. This is the mining equipment sector, this Caterpillar. And you can see this stock has been just annihilated. But today, it's actually putting in a nice little rally day. So this tells you, the Joy Globals of the world, Caterpillars, they could have some upside. And I think Joy Global is one that could have upside to around the 58, maybe 58.50 level.
Does this give you any feeling for some underlying strength in the industrials?
No, it just tells me there's a bounce coming into these stocks that are oversold.
Okay. All right. Let's go into, because we've gone through a lot of this stuff a little faster than we normally do. Let me throw a couple of questions out there. The financials. What's your thoughts about short term, long term, 10-year, 30-year? What's going on there?
Well, the financials in general. If you're looking at the financial stocks, which we've talked about J.P. Morgan and the such.
I'm talking more about bonds and notes.
Okay, if you're looking at the bond market.
Yeah.
Well, right now I think the bond market overall is a little bit overbought, but after a pullback, it should go higher. And if you look at the 10-year Treasury yield, you're going to see that there's an inverse head and shoulders pattern in place, and that takes us all the way to around a yield of 2.9%. So ultimately, I think that's where we're headed.
Okay, all right. So I got.
It's going to take time to get there. I don't think it's going to just get there immediately. But right now, we could see a little bit of a pullback in bond yields. But ultimately, as long as we stay above 2% on the 10-year, we're going to work our way up to 2.9%.
Okay, all right. So in essence, we are going to be seeing, from your perspective, some movements in interest rates now, not necessarily down.
Absolutely. I think right now, traders can look for a little bit of a pullback, but interest rates are going to go higher. They're going to go higher the second half of 2013, and it's going to be problematic for the stock market.
Okay. You have threaded the needle more than once on the copper market. Do you have any thoughts there?
Well, today copper is showing a little bit of weakness, but I do have a level for copper futures that I think looks pretty decent if it can get there. Now, today I believe the copper market, for the most part, finished right around the 319, 320 level, and I think around 310, maybe even that double bottom of 305, copper does look like a pretty good buy.
Okay, got it. Long as we got a little heads up on that. How'd your trading room go today?
Trading room went excellent today. It was a little bit on the slower side because a lot of moves. The markets really just had a big move, but we have a nice group of swing trades doing very, very well, and we cashed in on a few nice scalps today. We had an ENVI trade, Barnes & Noble, ConocoPhillips, all some of the scalps that we did today, all winners.
Wonderful. All winners. Loved
all
it.
Winners.
It's not easy to do that, man.
Well, I mean, this stage of the game, Michael, this is a humbling profession, but that's why traders or anybody that's interested in being a trader, he needs to learn and needs to get educated in what moves markets. Most people would have thought last night with the Nikkei crashing that there wouldn't be many long side opportunities today. And here you can see the market is up, 200 points on the Dow.
The hair is up on my arms, man. You just bring goosebumps to me when you do this. All right. How do they get into that room and see you do exactly what you do?
Yeah, just come on over to InTheMoneyStocks.com. Check out our chat room service. You'll see our desktop. You'll also hear us commentate throughout the day, and you'll be able to ask questions throughout. It's an open forum for everybody to take advantage of. I think traders, it's a must-do, in my opinion.
Definitely. With a track record like yours, it's amazing. Thanks, Nick.
Thank you, Michael.
You're welcome. All right, everybody. Nick Santiago, President and CEO In the Money Stocks. Go there, get in the room. I mean, how often do you hear something like that? Guys, all winners today. That's amazing stuff. All right, up next.